All right, what's up, everyone? Welcome back. Uh, I didn't make a video, so I'm sorry that I missed on two uploads. I think the last time I uploaded was uh, Wednesday or Thursday. Uh, so yeah, I got sick. I'm still sick, but this is no video for me to be making excuses. So, so if I'm coughing a bit and not speaking because I just have a headache, fever, so I'm not thinking really straight. But it's not going to stop from making a audio. So let's get into today's video. So in the last episode, we talked about how to use the turtle soup strategy, how to find a bias for the day, and how the market moves, how the algorithm makes a false move to grab liquidity, time frames, time zones, and yeah. So the field swing is something that happens a lot. It can occur daily. It can, well, it is going to occur daily, depending on when you trade, what you trade. But it does occur. Uh, there have been many times that like a Nasdaq fails to take the previous high or the previous low of liquidity, and just starts going into the opposite direction. So I'm going to talk about how to spot them and how to actually enter on them. So let's get into today's lesson. So yeah, before hop into today's episode, let's just quickly say what we learned in episode 2. So we talked about how the algorithm hunts for liquidity at key times like the London, the New York Open, and we learned to wait for that turtle soup, the price taking out a high or a low, and then we entered as it reversed, and that's one of our key reversal patterns. So entering a short right here and exiting right here because of an SMT, or this is a more complicated, but yeah, we exit out of here of an SMT, or we could enter along because of this. If we didn't enter a short right here, we could have waited for SMT or for this liquidity to be taken, then enter a long position. About SMTs, we are going to talk in a different episode. So that is not for today, but let's jump in. So the failure swing explained. Now the algorithm doesn't always go for the full liquidity grab. Sometimes it shows its intentions in a much subtler way, and a failure swing happens when the market makes a final push, but just fails to clear a key level, like a previous high or a previous low, and it's a sign of weakness. Think of it like a boxer throwing a weak punch and just showing they're out of gas, out of energy. So it's kind of the same in this situation scenario. So this is a high probability signal that the market is about to reverse without liquidity grab. So either we will hop into a real chart and I will explain it more there, but for now I'm just going to show you on pictures. So you can see, now I didn't write this down because I want you to not only take notes, but from what is written on chart, but actually to listen to me. And can happen because of an SMT. The first thing. The second thing, it can happen because it's the end of a time. So it can be an hourly candle, 2 hours candle, and it just fails to create a higher high or a lower low. So those are the main two things. Because let's just say this is 1:59, so 1:59 p.m. and this is 2 p.m. And what does it do? It didn't create a higher high and just went down, right? Or maybe there was a previous liquidity that it failed to take. So let's just say, so from this example, this candle can be 1:59 p.m. You can see it created a higher high right here this week. What did 2 p.m. candle do? Failed to create a wick higher and drop down. So that can also be an example. So the algorithm just thinks that, they've made already a higher high, so there's no need to make another one, and then just dump. First of all, you identify a swing high or swing low. Then you watch for the second attempt for the price to retest that high or low. And this is the most important part. You look for the failure. The price will make a new high, but it will fall short of that previous one, which will create what looks like a lower high in an uptrend or a higher low in a downtrend. It's basically the market's way of saying that I tried, but I just don't know how the strength to keep going, right? I will show it in the chart, so don't worry about it. So here are two examples. Okay, in this case scenario, it is on the 1 minute chart, and what we can see happening is this candle was the 1:59. This candle, let's say, was 9:59 a.m. candle, and this candle was the 10 a.m. candle. Now, what did the market do? This candle didn't create a lower low, and just kept on going higher. So this was a failure swing. Right here was made a failure swing. If I could draw it. Right here. You can see the candle didn't go down and didn't take out this candle's wick low, which would have created an intra-turtle soup. Well, we need to be looking at a bigger time frame. The time frame is not the case. Well, the bigger time frame is not the case in here. On the next example, we can see also a failure swing. So we have a failure swing right here. Here it is, that exact same candle. You can see, what did it do? It is exactly the same one. This was on Nasdaq. And if we look at ES created an SMT. And that's why ES took this candle's low and went up. But Nasdaq failed to do so and created a failure swing and went right back up. So looking at bullish scenarios, same thing. Let's say this is 9:59 a.m. candle, and the 10 a.m. candle didn't create a higher high. What did the market do? Started going down. Same thing as here on a failure swing. We had this high right here. The market tried retesting the high again, but failed to do so, which created that failure swing. There's I didn't type it right, but you understand it. Let me just put an alert right here. Let me just do a quick trade breakdown of today. Okay, let me actually go to NQ. So a quick trade breakdown, right? Um, what we had right here, we had a for our range. Sorry, for our range. So this candle wasn't here before. So what did we have? We had the 6 a.m. candle, which formed. What did it do? Took out this range low, closed inside of this candle's range. And what did the next candle do? Took out the range high. Looking at 8 hours, what do we see here? We have another range. This candle took out the range low. What is this candle going to do? Take out the range high. So this is the 2 a.m. As you can see, what we have right here. I'm actually going to replay so I don't lose this. So here I have an example. We can see the candle 1:55 a.m. What did the candle at 2 a.m. fail to do? Create a higher high. It failed to create a higher high, but in my eyes, it looks like it did create a higher high. So this is what happened for me. But as you can see, in reality, it didn't do that. So in reality, you could have entered a short position right here and targeted whatever, the 50% of this. Let's just say 50%, right? Yeah. But as you can see on 1:55, what did it do? Create a higher high. 2 a.m. failed to do so. And if we are looking from if we are adding other confluences, you can see that it failed. Let's take this liquidity and this liquidity. But looking at outside of looking up, you can see that we are in a bearish market. You can see we were in a bullish. Then what happened? We turned into a bearish one. Let me drop to a smaller time frame. Let's go to 1 minute. Again, you don't need to be trading on 1 minute. I don't trade on 1 minute at all. Sorry. Sure. You see it, right? The 1 minute range, 156, 157 created this higher high. Bam, bam, 159. Oh, how did the hour open? Opened up bullishly. Failed to take out this high right here, creating a failure swing. And boom. But again, you don't need to be trading on 1 minute. You can see the same thing happening on 5 minutes. Also a range. Well, the range is not obligated to be. This is just giving you a better view. And this really wasn't a filler swing. Yeah. Well, this was not really a filler swing. 11:45. It wasn't that really close. Not 6, not. Now you can see what usually happens, right? We have the 4 p.m. We created a lower low. 3 p.m. we created a lower low. 2 p.m. we created a higher high. So you can understand how the hourly failure swings work and how to actually enter on them. So let's go to 1 p.m. Okay, there you go. See, on 1 p.m. at 12:55, we had this high right here. 1 p.m. failed to create a higher high. What did the market do? Started reversing, right? Of course, could have entered a quick scalp. Okay. Let's go look. 12. See? 11:55. 12 p.m. we created a lower low. Let's go to 11. There you go. Same thing again. 10:55. 11 failed to create lower low. Kind of reversed a bit and continue to go downwards. But of course, you need to see it on a bigger time frame. What is actually happening? 5, 7. Yeah, okay, we already looked at that. Yeah, I don't like trading on Fridays because I don't know. Just Fridays are not my favorite days to be trading. So we have a candle right here. We have a bullish candle. Another bullish candle. And what did the candle do? Fail, create a higher high, creating a failure swing. And what does the price do? Reverse. Right? Failure swing. Oops, sorry. So this is 12. So say this is 1 a.m. No. So say this is 1:59. So 1:59 a.m. This is 2 a.m. This is 2 a.m. 01. So 1:59 a.m. 2 a.m. 2 a.m. 01. The 2 a.m. candle failed to create a higher high, creating a failure swing. And the next candle proceeds to be bearish. We cannot do that. Yep. Yeah. And the next candle is bearish and continues. And 2 a.m. creates a failure swing, and the next candle is bearish. Same thing goes if it was being bullish. Your entry is going to be on the confirmation candle after that failure swing has formed. You are not going to be jumping in nearly. We are going to wait for that actually. We are going to wait for the confirmation for the hourly to close, and you place your stop loss just above the failed swing high or below that swing low, and you'll take profit at your consistent 1 to 3 risk to reward ratio. Again, if you can go for a 1 to 3, that is completely fine, but I only aim for 1 to 3s. If it's not a 1 to 3, I don't take the trade. And yeah, so what is the difference between turtle soup and a failure swing? Now this is the most important slide for tying everything together. So we have two powerful reversal signals. The turtle soup is a sign of aggressive strength. So the price takes out a previous high or a low to grab all the stops and then reverses. And the failure swing is a sign of weakness, that the price fails to take out a previous high or low, showing lack of momentum, which results in a reversal also. So both of these patterns tell us that a reversal is coming, and you just have to know which one to look out for. But don't worry, if you found this video hard, go and backtest it. Make sure to rewatch it 3 times. It's completely okay. It's completely fine. Some people learn it fast, some people learn it a bit longer, but there's no shaming in anything. When I was learning, I was watching videos, even hourly long videos, 5 to 10 times, and I just learned every time that I watched it again and again. I learned something new, so that's completely fine. Still, if you don't understand about the failure swings, that's also completely fine. You will learn it more about how to actually find them in a trade. Later on, I'm going to be showing my backtesting, how to backtest, how to put everything together, and how to find more of them later on in the future videos. So, if you are ready to master your mindset and trading logic, make sure that you are subscribed so you don't miss the episode 4. And on episode 4, we are going to be talking about the logic behind entries and when to avoid the trade. So the red flags, the green flags, and the red flags. And that is it for this video. If you found it helpful, like the video, subscribe, turn the notifications on. Again, don't worry if you didn't understand the failure swing. Go and backtest it on your chart. Find it for yourself. If you have any questions about it, write it in the comments. I will answer to your questions in the next video. So don't even worry about it. And I'll see you in the next video.